Malaysian Resources Corp says the works for LRT3 will resume in the second half of 2019. This is after progress was stalled for about a year, as Putrajaya sought to get the cost of the project shaved. MRCB Chief Financial Officer Anwanti says the group has signed the fixed price contract with Prasarana Malaysia and is now going through some redesigning of the project before restarting works. It had completed about 10% before the works stalled. He says the group had to defer the expected contribution from MRCB George Kent, the joint venture company, which is the project's turnkey contractor, last year. The revenue and profit contribution from LRT3 is now expected to commence in the second half of this year. Bank Negara is giving foreign insurers in Malaysia up to early April this year to submit their plans relating to the foreign ownership limit for insurers here. The 70% cap was set in 2009 under the financial liberalisation policy. BNM Governor Datuk Nur Syamsiah Muhammad Yunos says the new April deadline is on a bilateral basis. This is based on the insurers' plans as to how they intend to comply with the conditions, whether they choose to divest their stakes in their Malaysian units or contribute to the B40 National Health Protection Fund. The deadline to comply with this unit under the previous governor, Tan Sri Muhammad Ibrahim, was June 30th, 2018. Malaysia had required foreign insurers in the country to have at least 30% Malaysian ownership in their local businesses via stake sales or local initial public offerings. Malaysia's economy is seen remaining on a steady growth path this year, after it expanded at a faster pace of 4.7% in both the fourth quarter and full year of 2018. This brings Malaysia's gross domestic product value to 1.23 trillion ringgit at constant prices and 1.43 trillion at current prices. Central Bank Governor Datuk Nur Syamsiah Muhammad Yunos says she doesn't see a global crisis coming, despite headwinds from Europe and the US, as well as the ongoing trade tensions. She is expecting moderate growth this year on the back of external demand and the resilience of private consumption. The continuation of mega civil engineering projects will also help. Headline inflation is expected to average moderately higher. The GDP numbers are an improvement after the country recorded 4 quarters of slowing growth. Bank Negara will release its 2019 forecast in March. Sovereign Wealth Fund Khazana Nasional is said to be preparing to unveil a plan this month to raise more cash for Putrajaya by, among others, further paring its stakes in non-strategic assets. Citing sources, Reuters reports that the fund will look to pare its stakes in some companies to 15 to 25% under a new strategy set to be announced on February 28th. Khazana's portfolio includes 27% held CIMB Group, 36% owned Axiata Group, and fully owned UEM Group. The Newswire says Khazana also plans to shrink its presence abroad in locations such as London and perhaps offload some of the fund's foreign properties and tech investments as well. One of the sources reportedly said that Khazana is not desperate to raise money, not in the way that erodes value, and that it would be done in a very structured and gradual manner. Slama Properties has gotten the go-ahead from its shareholders for a plan to take the company private. To recap, the Wen family, which owns a 68.23% stake in Slama Properties, had offered to take over the firm via their private investment vehicle Kain Holdings at RM5.70 per share in October 2018 via a selective capital reduction and repayment exercise. The plan comes against the backdrop of a subdued property investment and development landscape. Kayan also pointed out that Slama Properties shares had not traded at or above RM5.70 since March 2016, and trading liquidity had been low on the open market. It raised its offer by 30 cents to RM6 per share in December, and then sweetened the offer for a second time to RM6.30 per share. 76.3% of Slama Properties shareholders voted for a special resolution on the exercise today. Entitled shareholders will receive a total capital repayment of RM687.7 million.